Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in. Let's take a look, see what people are sharing. If you want to follow me at Finance, and if you want to join our community, finding-value.com. We talk a lot about individual companies, the stocks that we own in this community. We look at a lot of charts. We do a lot of ratios, market conditions, technical analysis. We do a lot of stuff. We look at the fundamentals, sectors. We look at the fundamentals on the presentations of the companies. We do everything, guys. We are trying to increase our probability of success when we take investments in companies. If you are interested in something like that, sign up, attend the question and answer sessions. You can watch the midweek updates. Everything's posted, all the previous ones as well. And you can learn how to become a better investor. Discount coupon code if you want to use it. All right, so I posted a couple of things up here. It says oil equities versus crude itself. Obviously, the names are protected for members only, but big squeeze coming here, guys. Big, big, big squeeze. What does this mean? If oil continues higher, we start to see money flows go towards the oil equities. We could see a very big move in the oil equities. And what this is indicating is a large squeeze into the corner of a consolidation that is about to break to the upside. And I say that because I've seen enough of these charts and I look for the characteristics in the candlesticks that this looks about ready to blow. We could see a very big move in the oil equities. This is one of them. And I posted a second one. We have the big falling wedge. So I did an interview recently with, I think it was Triangle Investor is his name. I made the comment that this was the second best time to purchase oil equities. The best time was the bottom of this wedge in 2020, right at the bottom here in this dead period, where the buyers equal the sellers. We also have confluence of information here, where we had a ratio that was incredibly cheap of gold to oil. In fact, it went negative in 2020. We also had a bunch of charts squeezing into these falling wedges, and everything looked good. Everything was a go here. The equities were cheap to oil. That's what this is here. This is the cheapness in the falling wedge. And we had the commodity just dirt cheap. And then we also had all of the equities from a free cash flow perspective and from an asset value, book, what we'll call it book value, price to book, or something like that you could use, where these things were just cheap as all get out. This was the first best opportunity to buy it. This is your second best opportunity to buy it, because I think we're squeezing up before a big move. And hopefully that move is to the upside. And we've got crude oil starting to break to the upside, so I don't see any reason why it wouldn't be upside. But those are two equities versus crude oil. Platinum to gold ratio. And I know a lot of people, this means something. It means a lot of people do not understand that when you price an asset versus an asset, it means that you are in a certain market condition. There was a study that was done by, I believe, a couple of people from Yale, and they used the gold to platinum or platinum to gold ratio for their study. What they found was that the platinum to gold ratio, or gold to platinum, whatever one you want to, however you want to put it, was a better predictive factor on market conditions than price to book, price to earnings, the CAPE ratio, and all that other stuff. And what it means is that when this starts to turn upward, it means that it is going to be negative for stocks. When platinum starts to outperform gold, it's going to drag stocks lower, because platinum goes up under a different market condition than when platinum underperforms gold. So in 2008 or 9, when this started to drop, this dropping of this ratio is very good for the S&P 500, the NASDAQ, and those types of stocks. That was what they had researched in Yale. Now, platinum's a more inflation-sensitive asset than gold is. So when this starts to go up, which I think it will here very, very soon, it's going to indicate that we are in a different market condition. We saw that market condition going up from 1998 all the way up to 2008, which is this second peak up here. I think that we are so early in this bull market that 2020 was actually a move, not at it was the beginning of the commodity bull market. And now I think we're going to enter that big commodity bull market soon. Uh, Oil is very inflation sensitive, and so is platinum. And what we want to see if we are in this big commodity bull market is we want to see platinum outperform gold, and we also want to see oil outperform gold. So when these turn, which platinum just started to turn up, and I don't know if this is the beginning of that big move. It very well could be. Don't know yet, but we have to see follow through. And we are coming from ludicrously low levels. This ratio it's an anomaly in history to be this low where we're at with platinum to gold. Now, if we look at gold to oil is another ratio that we want to look at. This is when this breaks down lower, oil is outperforming gold, and it's indicating that we could be going into an inflationary environment. So what we're looking for and what we're looking at is we're adding a bunch of data together. We're adding the gold to oil ratio. When this goes down, that is positive for obviously commodities and oil and platinum. And if platinum were to break higher like it is against gold, we would also see a rollover potentially in the NASDAQ and the S&P 500. So we also want to watch this to see if we get a rollover in the NASDAQ up here, if it rolls over. And it very well could. We're also looking for the S&P 500 because this could also start to roll over and consolidate or do something like that and fall on back. If we get all of this to kind of happen, which this looks like it definitely wants to roll over, it's all indicating a certain market condition that we're in. We're in an inflationary market condition. You would also see bond yields, like the 10-year yield, go up. And this is they're all in alignment right now. So this is a good time to be looking for certain investments at a very early point to buy bottoms at. And if you can buy bottoms, that's where you get max asymmetry. You also get the best risk reward opportunities in these types of setups here. Oil versus the NASDAQ composite. Remember, I'm talking about market conditions. So the ratios are a way to objectively say if something's expensive or cheap in comparison to history. That's why we're using them. To take it a step further, if oil outperforms the NASDAQ, we're in a commodity bull market. We're at a very low level here. If you look at the dotted green line going across, we are lower than the beginning of the last commodity bull market of oil. So where we're at in oil today is like it was in 99 when oil was priced at $10 a barrel. That's how cheap we are when you start to look at asset versus asset and compared to history. I think that we are in an oil bull market. If you zoom in on the right-hand side here, we are starting to break out of a falling wedge to the upside where oil is starting to outperform the NASDAQ. We are in very early innings of this move. This is where big money is made. And I just want to make this statement. In order to make money, and in order to make a lot of it, generally what you need to do is you need to rely on patterns. The patterns are a function of the psychology of the herd of the market, and it also indicates money flows. when money starts to flow differently. And the most amount of money that you can make is if you jump really early on a brand new trend and ride that trend all the way, if you can, to close to the top of the trend. So if you were to ride it from this, we'll call it squeezing corner here from 98, 99, 2000 up to 2008, that 10-year, 8-year move, 8, 9-year move, whatever it is, if you could do that and you just need one, you will outperform everyone if you can do that one move. If you buy the NASDAQ in 2009 or so and ride the bull market in the NASDAQ from, let's say, 08, 09 bottom all the way to 2020, you'll outperform. And then you would have outperformed swapping in 2020 into oil companies at the bottom there if you had the cojones to do it. And you'd make millions and millions of percent gains doing that if you can execute it properly and not trade your way out of all that by over trading. So here's some more ratios, and I like doing the ratios. Crude oil versus silver, you can see we've got a falling wedge, breakout, falling wedge, and we are close to breaking out against silver. So we could see crude oil start to outperform silver. We can see crude oil outperforming uranium here. We did a little bit of a bottoming action, and we're starting to move higher for crude oil to outperform uranium. And I know there's a lot of uranium guys out there, but we could see a move here of an outperformance of oil. Here's oil versus Dow and oil versus gold. I love the ratios, guys. That's where my conviction, part of my conviction, comes from. But here's the falling wedge. This was the false breakdown in 2020. This right here in 2020 was the best buying opportunity in oil of a lifetime. By far, bar none, the best. The following year or two, there were companies that did 20, 30, 40 times your money in that 2-year period. It was the fastest growth that I've ever seen in my account occurred from 2020 to 2022. If we zoom in on the right-hand side, guess what we've got going on here? Crude oil starting to outperform Dow Jones. The market conditions are changing right in front of our eyes. And this means that we should be looking at potentially crude oil investments. The equities, energy service, all of it. Here is crude oil versus gold. It's the same pattern, guys. Look at this pattern here. It's a big wedge, breakout, big wedge. Big wedge, breakout, another big wedge, and a breakout. It's just starting. So hopefully crude oil continues to outperform gold, Dow Jones, S&P, NASDAQ, silver, gold, platinum, palladium, basically everything. Nat gas could outperform too. But crude oil's, it's well set up. That's what I'll say. It looks very well set up against all of the other asset classes. Is natural gas priced for perfection? Natural gas storage, just to show you guys what the storage inventory levels look like. And they are falling quite rapidly, but that's pretty normal when it comes to the winter. And we'll see if we can bring it on down. Eric Nuttall says, energy remains an under-owned, out-of-favor, generally loathed, contrarian sector despite record low global oil inventories, record high global oil demand, 1-year high natural gas prices, imminent U.S. sanctions enforcements on Russia and Iran, and 2024 equals the lowest rate of growth in U.S. shale since its inception, twilight of U.S. shale. We've got disappointing non-OPEC supply growth, strong OPEC plus cohesion and tightly held spare capacity, record free cash flow buybacks, fortress strength balance sheets, 44% currency uplift for Canadian producers, and many stocks trading at 15% plus free cash flow yields at $75 a barrel oil. It's 10% at 70. So this is your S&P total energy weighting, and we are way down here below 5% right now. December of 2020 was probably the ultimate bottom. And I think that we're going to go way up. I even think there's a chance that we can beat this high in 2008 when we finally peak out in the future. Late 2020s, early 2030s, something like that is probably where it could peak out, or maybe even further into the future. Josh Young says oil and gas production is rolling over with the rig count in the US. I can only get so bullish. And US rig count is down 5 from last week to 584, with oil rigs down 2 to 480, and gas rigs are down 3 to 100, and miscellaneous rigs unchanged at 4. Christine Guerrero says there goes 2 million barrels of oil production per day. We got WTI will move to $85 a barrel quickly if this lasts. And this is a quick update to gauge the amount of sanction crackdown. We are dramatically decreasing the production of those sanctioned companies and the shipping of it. Celsius Energy says, I continue to project that natural gas inventories will flip from their current 112 billion cubic feet surplus to a storage deficit versus the 5-year average by January 20th, as temperatures remain consistently colder than normal. In this person's opinion, a sustained deficit merits long-term gas prices greater than $3.50 an MMBTU. And there's natural gas storage going negative, potentially a deficit below the 5-year average. And that's what's causing the price move in natural gas. Vancouver Island guy says oil jumps more than 4% on concern over more sanctions on Russia. Good call, trend bullish on the recent run. And I think there's obviously insiders here, because that's why we're squeezing up into those corners there and ready for a big breakout. People knew that this was coming, and that's almost always news is released when you get to these the tips of these corners of ratios and or of the oil versus dollar charts. Freight futures AM update, we had a big move in dry bulk. Cape size up 19% versus Wednesday, which was up 7% today, and Panamax was up 2%. Tankers were up big. VLCC and Suezmax both up 8% versus Wednesday, up 5% today and 6% today, respectively. Patrick Karam says a significant bull market for crude oil is on the horizon. Really, I would have never guessed. This is historical 145 years of SPX priced in crude oil. And what we have here, if you look down at the bottom of crude oil, you get a consolidation, breakout, consolidation, breakout, 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 and we're consolidating and we're looking for another breakout where we go to an entirely new level on crude oil prices. That new level is probably going to be multi-hundred dollars. I know that's difficult for people to understand now, but that's where I think we'll end up. I think we're going to end up somewhere like $300, $400, $500, $600 a barrel. That's where I think we'll eventually peak, and then we'll do another consolidation at a higher level. So we could peak at like 500 or 600 and then drop back, maybe to multi-$100 oil. We have a big move here. This is SPX, which when this turns and falls lower, those are your crude oil outperformances. So when they turn and start heading lower, which we've already got, this is a shoulder, a head, and a shoulder for the ratio of SPX versus crude. And we can see it's a shoulder, a head, and a shoulder. And we're scribing out the right-hand shoulder right now. This is the second best opportunity. This is your best opportunity of a lifetime. Your other best opportunity was in 2000, roughly speaking, 99, 2000. And if you can catch these moves all the way down, you just need one move, and you'll make many, many folds increases in your portfolio. GSG says the valuation gap continues to narrow, with WTI now just $4 undervalued. Oil price is up this AM is fundamentally justified regardless of the specific news item the media attributes to the price rise. These guys are getting smarter, guys. Like the news is just garbage. They just make up whatever they want. Oh, here's the news. Throw it on out. This is why it moved. Brady says the platinum versus gold ratio is looking absolutely fantastic. The chart shows platinum will outperform gold going forward. Always know the very big picture. Totally agree here. I've been buying the crap out of it all in this area here of platinum. I did it in 2020 as well. This is such a great opportunity. It's unbelievable. Unbelievable opportunity here in platinum. Tavi, obviously talking about oil prices. I'm a big oil bull. Oil prices are surging with gold, silver, copper, platinum, palladium, and other metals also climbing. Natural gas has reached a 2-year high, and agricultural commodities are steady, gaining ground. Break even rates continue to rise as well. It's clear that inflation is picking up speed, even as the Fed searches for reasons to proceed with further rate cuts. The combination of rising consumer prices and a financially repressed environment creates an ideal scenario for hard assets to thrive, in his view. There's the big breakout, boys. There we go. This is a big deal, guys. This is going to be a big move. God, I hope everybody rides this thing. And then you're going to see all these other tertiary commodities, platinum, silver, they're all going to break with it. We're entering this big inflationary bull market for commodities, and we're just at the beginning here. I hope people are prepared for this. A lot of people are going to get hurt because prices are going to go up of everything, of everything. What I think I've got going on here today, um, not going to go over that. This is Tom McClellan, the correlation between the current stock market and the pattern right after Reagan was elected in 1980. Very similar fractal, and then a potential rollover for the S&P 500, like 78 and 81. Maybe it's something like that. We could see that the S&P roll over in a increasing interest rate environment where oil rips and commodities rip, and this rolls over. Not going to talk about that. Generational breakout in gold happening right at the moment. And the big picture view, this thing's ready to break, guys. Look at this trend line we have up here. We break that to the upside. My Lord, we are running on gold. And I don't see any reason why we don't. Like this is all just insane. All these charts are insane. But that's where I'm going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We've got discount as a coupon code right now. And that's all I've got. So we'll catch you guys later. This is Finding Value.